I want to start this video off by saying just because the title of this video is why you'll lose money by keeping it in a bank, that doesn't mean by keeping it in a shoebox under your bed or in your back pocket you'll be any better off. In fact, you're probably going to be worse off, because this video is about how inflation eats away at your spending power over time. The definition of inflation is the general rise in the prices of goods and services and the fall in the purchasing value of money. Let's look at an example of inflation. Let's say a company can produce 100 widgets each year, and that's their maximum supply capability, and they sell all their widgets for $5 each to customers. The next year, they realize 150 people are willing and able to buy their widgets at $5, but they can't produce any more widgets, so they put the price up to $6, and at $6, only 100 people are now willing and able to buy their product, but they're still selling all that they're producing, so they're happy. This happens year after year as they can't produce anymore. Excess demand increases the price, and this is kind of, in a broader sense, how inflation works, although there is a lot of other factors at play. So let's take a step back and look at this from your perspective. Say you've got $100 in a high yield savings account, and based on today's interest rates, if you're lucky, you'll get a 1% return on your money. Then we look at inflation, and based on the last 20 years, the average is about 2% per year. So you spot a product that costs $100 today, and you decide you're not going to buy it now, but you will buy it next year. Next year comes around and the bank pays you $1 as interest for the money you have in the bank. So now you've got $101 in your bank account, but the product you're wanting has increased to $102. So now you can't afford the product, and this is how you lose money, or more specifically, you lose spending power by keeping the money in a bank. Now let's extrapolate that out over 40 years, which is likely your entire working life. You've got $100 in a bank account, which is giving you a 1% interest rate, and after 40 years, you'll have $148 and change thanks to compound interest. Inflation over those 40 years has stayed at 2% per year, so what you could buy for $100 now will cost you $220 in 40 years' time. I'll put the math up on the screen, but over the course of 40 years, you've lost 32.7% of your spending power by doing nothing more than putting your money in a bank account. Now that's bad enough, but it actually gets worse, because at current rates in the US, checking and savings accounts are only paying about 0.05% interest on the money you have in their accounts. So doing the same math as before, you'd lose well over half of your spending power over the course of 40 years.